Okay, so this is problem 3 on exam 2 review. And problem 3 says, this information relates to Tandy Company. And there's a 1, 2, 3, 4, and 5. And then we're going to do A and B. So A says, prepare the journal entries to record these transactions on the books of Tandy Company using a perpetual inventory system. And remember, with the perpetual system, you update it every time. You update your inventory and cost of goods sold every time you make a sale or have a return or an allowance, right? Okay, so April 5th, purchase merchandise from Bueller Company for $30,000, terms 2/10, comma, net 30. So 2%, 10, net 30. So if we purchase, then that means we're the buyer. Okay, so who are we? We're the buyer. So what did we get? Well, we purchased merchandise. So that's inventory. So we would debit inventory, $30,000. And then what else did we get? Well, we got a bill because it says there terms. Anytime it says terms, that means we bought it on account or we sold it on account if we're the seller, but in this case, we're the buyer. So we are going to credit accounts payable $30,000. Okay, so that's April 5th. On April 6th, paid freight cost of $900 on merchandise from Bueller Company. And we remember the rule that if we're the buyer, everything goes to inventory. So we paid for freight for the inventory we got. So we're going to debit inventory and we're going to credit cash, $900. Because remember, paid or pays means it's the cash account and we're paying. So that means cash is going down. So we're going to credit cash. Number 3, on April 7th, purchased equipment on account for $26,000. So what did we get? We got equipment. Equipment's an asset. How do we make that go up? We debit it. So April 7th, we're going to debit equipment, $26,000. And it says on account. So that means we're going to credit accounts payable. Unless it said it was a note, and then we would credit notes payable. But it doesn't say a note. It just says on account. So we're going to credit accounts payable. Okay. That has nothing to do with inventory, and that's because you know what, we can buy equipment and supplies and things like that, even though we're a merchandise company. Okay. Number 4, on April 8th, return some of the April 5th merchandise to Bueller Company, which cost $3,000. So what are we getting in that instance? Well, we're getting a lower bill, right? Because we're returning the merchandise, and we're getting lower inventory. So inventory is an asset. So to make it go down, we have to credit it. And to make our bill go down, accounts payable is a liability, which has a credit balance. So to make it go down, we have to debit it. So we are going to debit accounts payable, $3,000. And we're going to credit inventory, $3,000. Okay. Then number 5, on April 15th, paid the balance due to Bueller Company in full. So it says they paid the balance due. So we're going to go back to the date we bought it on, which was April 5th. As long as we're paying it on the last day of the discount period, we can take the discount. So this says 2/10. So that means we could take a 2% discount if we pay it within 10 days. And we are paying.
I don't want to interrupt, but this part B says that.
Yeah, we're doing A first. Yeah. Okay. So we are within 10 days because we bought it on the 5th. We're paying it on the 15th. So this is where we have to do that formula, right? Purchases minus any returns or allowances times the discount percentage gives us the discount dollar amount, that whole formula, right? So I have that here somewhere, I thought. Hold on, let me see. Oh, here we go. Okay, so coming over here, we've got purchases, $30,000 minus any returns or allowances. We had a $3,000 return. So that gives us an accounts payable number of $27,000, 30,000 minus 3,000. We take that accounts payable number of $27,000 times the discount percentage of 2%, right? 2% is going to give us a discount dollar amount of, $540. So we take the accounts payable amount of $27,000. We subtract the discount dollar amount of $540, and that means we're paying $26,460 in cash. So we do all that math first so that we can then very easily do the entry because we need the accounts payable number, the discount amount, and the cash, okay? And I have here discount amount, and then I have inventory in parentheses because when you're the buyer, everything goes to inventory, okay? So we're going to come over here and we're going to see April 15th. We're going to debit accounts payable $27,000 to clear that out. We're going to credit inventory $540 because remember when you're the buyer, everything goes to inventory and this is the amount of discount we're taking. So that means we paid that much less for our inventory. And then we're going to credit cash for $26,460 because we are paying it, which means our cash is going down. Now we're going to go to B. And B says, assume that Tandy Company paid the balance due to Bueller Company on May 4th instead of April 15th. Prepare the journal entry to record this payment. Well, once you're past the 10 days, you don't get to take the discount anymore. So when you don't take the discount, your accounts payable number and your cash number are the same. So you're going to debit accounts payable for the purchases minus any returns or allowances, $27,000, and you're going to credit cash, $27,000. Okay. So let me see if I can get, oh, there we go. That's all of the entries on the screen there for the third problem on exam review 2.